Good day, traders. Mindset reset. It's Monday, the opening range for the new week. Hope everybody had a great weekend. I know I did. I got to play in a hockey tournament with some of the crew that I grew up with and played with since I was about 6 and 7 years old. So it was great to catch up and see everybody. And we had three games, and feeling it a bit today after that type of weekend. So today, talking about a couple of things. I'm going to do a technical video later to go a bit more in depth in this. I explained this to a couple of traders in some explanations last week about going horizontally across your levels when you're identifying a best trade candidate. So there's a couple schools of thought regarding the best trade setups. Some traders like to resonate with certain specific setups. And as I've talked about in the past, I like to target asymmetrical risk reward opportunities, and over the course of the week, the larger setups are where the larger opportunities and money can be made. So Monday, Tuesday, Wednesday, day 1, day 2, day 3, Wednesday, Thursday, Friday, Wednesday's a reset, day 1, day 2, day 3. So when we are on a Monday, I'm going to look for an instrument that potentially gives me a Thursday, Friday, Monday opportunity, a 3-day setup. Again, a market that potentially may have gone out of balance, gone into consolidation, day 1, day 2, first red day, first green day, an inside day for a parabolic reversal or trend trade on the third day, whether that's a Monday, a Tuesday, or in the new week, Monday, Tuesday, Wednesday, the midpoint range of the week. So sometimes traders, like I know Steve in New Jersey likes reversals. That's his expertise, and that's what he focuses on. Other traders are targeting high and low of day reversals in the instruments or the sessions that they're trading. So there was some great reversal opportunities in Asia on gold, to name one, Euro Oz, Pound Oz, closing price reversals into Friday's trades. Again, markets that have either gone out of balance or distended out in that US session on the Friday gave traders that reversal opportunity in the new week, new timing cycle. Out of balance market, closing price back through higher level longs in the US window, or in the case of gold, lower level shorts. So we had first red day on Thursday, first red day trade on Friday, the first bounce, first red day trade on Friday. And then the reversal in gold gave traders, I think, 75 pips, an explosive 75 pip move right at the beginning of the second hour. Straight up through lower level shorts. So there's opportunities everywhere. And if you can start to identify what your expertise is, meaning that certain traders resonate better with certain setups and they visually identify with those patterns better. I like to look for first red day setups, meaning I like to look for the opportunities that are going to turn into first red day or first green days, or the first day after, which is the first red day trade and the first green day trade, because they're the ones that potentially will go on a range expansion and not come back during that day. We saw that on oil. Fantastic opportunity. And then being patient and understanding, like we're on day 1, but we had a 3-day setup. So tomorrow on day 2, Tuesday, I'll be looking for one great trade and potentially another 3-day setup. I may not get a 3-day setup, and so I'll be hunting for a 3-session setup with the same thesis in mind. Whether we've had a short squeeze coil, a long squeeze coil, it could be a reversal in the US window from a pump in Asia, consolidation in London for a dump in the US window, and vice versa for a long trade. So visually identifying with what you resonate with best and what you trade the best with, and also being willing to just sit and be patient and hunt out maybe only 2 or 3 trades within the week that are the 90-10 opportunities. Reinforcing that, not necessarily forcing yourself to trade every day unless you have a best trade candidate. Being at peace to just sit back because you don't identify a best trade setup being in place yet, and coming back the next day, the next session. You know, as I've talked about, often I'll look for an Asian session trade. We could get Monday, Tuesday, Wednesday, and it could be a Wednesday evening, a Thursday AM Asian session, parabolic for 75 pips, which outweighs trying to get in or get 25 here or 50 here, counter trending a market just because I feel I need to trade. The longer that you trade and scaling your trades up in size, the easier it becomes to make money just on those 90-10 parabolic setups, and being willing to walk away until you see those best trade candidates, whether they're short squeezes, long squeezes, parabolic trend trades for day twos, reversal trades, high week, low week, low week, high week opportunities. As the week evolves, the ranges start to expand, and then we can see front side, backside templates. Sometimes the front side is establishing those boundaries. And again, I mentioned this last week that traders will often get chopped up or have a day that they get chopped up on as the market or the instruments that they're following establish the boundaries, and they miss the easy money on the backside. And the easy money, again, one or two of those parabolic trade opportunities can easily grow your account fast. It's the parabolic scalable setups that will grow your trading account fast. It's the choppy 50-50 trades that will chew up the good results that you get from the explosive parabolic opportunities. 50-50 trades are also what do the psychological damage to your not only your financial capital, but your psychological capital. So again, if you're a surgeon, or you're a doctor, you become a heart surgeon, and then there's heart surgeons that become specialists within cardiac surgery itself. So they don't all do the same type of surgeries. You get specialists that specialize even further. And as a trader, that's what I essentially like to specialize on 2 or 3 best trade candidates that I know show up every week, go through my basket of instruments, whether it's going to be in Asia or the US, and inevitably we're going to get pretty much every index, gold, oil, will give at least a minimum of 1 parabolic best trade opportunity in the week. So understanding that, there's no need to force trades anywhere else just to catch moves or to get into the market just to catch some pips and get some money, because often those are the days or the market conditions that can get a trader in, and it might be you might get out and get lucky, or it might be a nail and bail, and it's a great 90-10 nail and bail, but also there's days and conditions that traders get into, and all of a sudden they're caught and they get into situations where they start to bend their rules a bit, or they trade outside of their hours a little bit because they got enticed into taking a position, and now that position is going against them, and now they enter into territory that can become self-sabotaging. So these are all the things that, again, will help protect you over time, and that's the goal. It's about consistency and scaling and growing the trading business over time. And if you do things where you're cyclical, you do things right, you destroy some things, you do things right, you sabotage some things, you're in this never-ending cycle, and you're also jumping around from different types of trades and methods and systems and everything else. Whereas again, I repeat that if you focus on 2 or 3 best trade setups that you resonate with best, whether they're trend trades, reversal trades, squeezes, understanding how you would execute them. So again, timings, levels, behavior of price. Once the basic model for entry criteria is the basic model. So often traders will ask, if I got in here, would it be too late? And this is where the understanding of the levels takes place and the timings, because that's what gives you the confidence on the smaller time frames to enter in, start a starting position, and as it's confirming, being able to add in, and at the close of those longer time frames and the basic model criteria is met, that can be the end in some cases of where the last positions are put in as it's about to accelerate and explode. And if you're just using that basic model and the market gives you a later entry, then the idea potentially maybe on that trade, as you're learning to trade it better, is to just take a small position and focus on the execution of that trade setup itself, taking profits, managing your risk, entering in, holding that position, not getting shaken out, letting it run to its target, or letting it clear a level before you adjust your position to break even, and walking through the process of performance in live time, developing that skill set, building the confidence and the winning mindset to master those setups. So hopefully that makes sense. Congratulations to the traders that hit oil. There were traders that were long in London at closing price on gold. There were other opportunities on different currency pairs in the London session. As I mentioned, there was some opportunities on some cross pairs in gold in the Asian window. It's only Monday. It's only Monday. Day 1, day 2, day 3. Tomorrow's Tuesday. We can potentially be hunting for a 3-day setup. Tuesday, Monday, Friday, or a Thursday, Friday, Monday setup that goes into a Tuesday market condition. And keeping it simple, traders. Build it one great trade at a time. Focus on best 90-10 setups. There's no guesswork. And as Paul Tudor Jones says, always think of your entry as last night's closing price. Have a great day, traders, and may the markets go with you.